Hello everyone, welcome back to another video. In today's video, we are going to discuss how we can decode markets using the profile charts and the footprint charts. So what it means is that sometimes you find it difficult if you look at information in the volume profile and footprint charts. It becomes a little overwhelming to understand the activity that is going on at every step. So what we'll do is we'll go step by step and understand the important inflection points that we have had in the past few days. So for everybody's information and consumption, what I have right now is the NQ100 or the NASDAQ 100. Along with it, we'll also do the ES mini so that we have a clearer picture on both the indices that hold a lot of weight. Okay, before we proceed ahead, the first thing I want to say is that the video is for educational purposes only, and please consult your financial advisor before taking any trade, as it is a risky business. So without further ado, let's start with the NQ. Okay, so the latest day, that is Friday, we saw activity below. Let's keep aside the event that has been taking place in the markets. Let's purely look at the charts and then see what is happening, and that helps us declutter the noise that we see around, and it helps us clear our focus. So the first thing that we notice is that this up day, okay, for whatever reason happened, and the next day the market opened right here. Okay, so there were 3 points where in fact this was a multiple distribution day, and it opens right in the second half of the distribution of this day. Okay, and it doesn't breach this, it touches the low volume node and goes down. Now this is first information that we carry forward. Now what we're going to do in today's video is actually discuss what we can expect in the coming few sessions. Now I will just discuss this particular day and this particular day, and then we'll go one by one into what was happening on these days. Okay, so when this day happened, the market obviously ended lower, but look at the way it ended lower. Now what catches my attention is look at this again. This is one way of saying that the value did develop lower, but look at this selling. This is I mean, this is not good selling. I wouldn't consider this aggressive selling. It is quite normal in a range bound market, quite normal when the market is in a bullish environment, and I mean, breakdowns like these happen and then it consolidates is not what we want to see in a, I mean, bearish tone. And what is even more interesting is it fails to take out the low of the 10th April. If you see, this is really interesting. It doesn't even take out the low of the 10th April. In spite of being the environment being so bearish, we aren't able to take out the 10th April low. Now what we'll do is we'll just contract the volume profile chart and look at this zone. Okay, this is an entire balance zone, so there is nothing out of the ordinary that is happening here. It is inside the zone. In fact, this particular thing, when you see something like this, of course it is it would be considered bearish, but what is interesting is that the market again, if you see, this was a balanced sort of a zone. The market broke out and then again tested the previous highs. Right, again, this is a weak high. We'll discuss this concept sometime later, but what I'm trying to say is it is a visual reference. It just touches here, comes back. So this is if I draw a rectangle of a sort, I'll just make one. Okay, so if I draw this zone, so it's within this zone, there is nothing bearish or bullish. In fact, it is more bullish because it's been moving up for a lot of time, and then it has stayed within the zone in spite of the events that have taken place in the recent past. Okay, so the first step, if we have to consider some bearish environment, is to break this zone to one side, or the lower side rather. The other interesting part is when this down day happens, do you see if it was so bearish, we've had 1 2 3 4 5, and this is the 6th session, and we haven't been even able to clear this zone. Okay, this low zone where a lot of volume clusters. So when you see these clusters, you really keep them or have them plotted for the future. So this is an 18,100. I will just draw this in a better fashion. Okay, so if you see this zone, okay, 18,100 something is the zone. I would always have this in my playbook, because this is the zone that hasn't broken, and this is the cluster from where we saw a sharp pullback, and the market has never actually been able to break this. So this is 18,120 or so is a carry forward zone, and it hasn't even broken on this day. Okay, so if the market opens gap down, what generally happens is when the people are bearish a lot, it breaks down and pops up back inside. You would have heard me talking a lot about this. So if the market does break down, let's consider it breaks down, opens gap down here, so again the start is bearish. But what happens is, if within the first half an hour or 1 hour, the market moves back within this zone after doing this, this is an indication that we are going to expect a move up to 18,550 over here. Okay, so if we see something like that, we can expect a move to the other side, is what I'm trying to say. And why am I saying this even in spite of so much of bearishness, is because look at this bearish, I mean, action on the volumes and the volume profile. It is I mean, not that bearish at the moment. If we have a big elongated profile over here with a good 200, 150, 200, 250 point move to the downside, yes, maybe then I would say that we are moving towards a sort of a bearish environment. But for that as well, this is again 18,100 to 18,000 is a very significant zone that we need to break. Okay, what we can further see is, if the environment is bearish and we start holding off these zones as well, let's say on Monday, again it's not a bearish environment, so we have to play it out when we see what happens on Monday. But this is what I have noticed in the past few sessions, and this is what I think is going on in the market. Now let's go on to the footprint charts as well. Okay, so when the market opens, obviously there's a huge volume, it opens gap down, and you can obviously expect a lot of longs covering their tracks. And the first three bars, 50, this is a for your information, this is a 15-minute footprint chart. What I have on the left side over here, I will just show you. What I have over here is volume, and the color darker shades indicates larger volume, and what I have on the right side is the delta profile. Okay, so I'm seeing volume and delta profile both on this. And what I saw over here is, if you look at these three bars, they had a lot of volume as soon as the market opened. And of course, if you see the upper part of all these two bars, was a lot of buying that was absorbed, and the market moved down. Okay, and again, it is normal. If you look over here, this is the place, I'm sorry, this is the place, this is the volume profile that we just discussed. This is the node that it tried to break, it didn't, and it failed. And obviously then we when something like this happens, just for information, when we try and break a node and fail, we generally end up to the other node that is the nearest to the downside. So that was this one. We sort of took a resistance when we failed this again, so the next node was this one over here, and we formed another node. So you can carry this forward. So if you fail to move up in this node as well, the next node that we have is again that we just discussed, that is close to 18,100 and 120. Okay, so that is how you can go step by step. So if you break this zone, for example, over here, this node over here, we can expect a break or a test of this node, 18,060. So if you break this node, you target that another 60 points on that to that node, and that is how you progress one by one to each node. Similarly, if you look at the footprint charts over here, the first I mean important aspect that I would consider is, if I have to start moving towards the bullish side, that is target these nodes on the upside, is I would first like a test of this or a break of 100, 200, 18,200 to 220. Why am I saying that? If you look at the volumes here, and this particular if you look over here, okay, so this is one place where the buyers did try to step in, they did move the market up, and they failed here. Okay, these two bars, and there's a lot of selling in these two bars over here in this region, and this region. So that is why this is the selling which, I mean, was successful throughout the day. If you look at this volume profile chart, it did hold. So I want these sellers to give up for the market to move up. So as soon as we break this zone, I will draw a rectangle again over here so that it becomes clear. As soon as we break this zone, I'm interested in going long at least till 250 to 260 levels. And so these 40 points, this is how I break my days, or whenever I am taking a trade. Even if you're taking a trade on an intraday time frame, what I want to do is I break them into small zones and get a bigger picture or a better, clearer picture that way. So if I break this zone, the first step I'm looking for is 250 to 260 level, and a test of that. Okay, so now let's move on to the other step that I like to do is we'll just go back again. So when you consider, when you have days like this, these are very good reference points for you to carry forward and build your context over. So what do I mean by that? The simple thing that you can do is go here and add an anchored VWAP. Okay, so this is a huge down day, and you see more or less it has been taking support or resistance. So this acts as a dynamic support and resistance. And till when do you carry forward this? Till the time you break this zone on either of the ends. Okay, so we have a zone on the top. This is again a good reference point, 550, that we just discussed, and the lower end is 120. So we need to break the zones, after which we stop considering this anchored VWAP. And if you look at it, when we break it over on this day, for example, okay, when we break over, we immediately come take a resistance, and this has been acting as a good support or resistance, or I would rather say a good indication of what is happening. Now look at the slope. After this slope, look at this slope, which is quite interesting. So this is balancing, so this is not bearish. If you look at the slope, it is absolutely flat. Okay, now the first thing, again, like we just said, it's at 260. That is why this is another conference that I said. So I am hoping, because this is still flat, and when we break 220 or 200 levels, I am expecting a test of this to this node. I will just show you. So this node is what I'm expecting, 260 to 270, and similarly on the footprint that we just discussed. And that is where, when we break it, I will go to the long side, or prefer a long to the 200 270s rather range. And after that, again, we look what happens thereafter. And the other good VWAP that will be really important is a break from this, or you can even have this particular day's VWAP, and which is at 200. So again, like we just discussed, if we break this zone 200 to 220, we will expect, or we are likely to go to 260. And this is a play that we already have before the Monday market open. So if we break 200 220, I'm expecting a touch to the 260s, and I would rather plan a trade that way whenever we reach this. If on the other hand, we open here and we open gap down, for example, and we try and break this point, and we see a bar like I would like to show you something like this, okay, where we see a lot of buyers getting trapped, and the next bar just a lot of the POC right here, and a lot of buyers over here, and the next bar closing below it, or a bar with the POC on top and a lot of buyers over there, and the market starts going down, so these buyers getting trapped. In that case, I would rather plan a short. Okay, so I'm giving you both the scenarios. For example, if we open gap down and we test this area and we see a bar like that, something like this, with a lot of buying over here, greens over here on a delta profile, I would rather prefer a short. But again, it remains to be seen. But this is what we have on the NASDAQ. Now the last thing I want to do is I will get a profile chart, the market profile chart, and have a look in a similar fashion over here. So again, if you look, it becomes quite clear that we are in a balancing range. As of now, we have not seen anything that indicates that there is a bearish tone to the market. Again, this is the big bar or the big day that we had on the long side, and we haven't been able to break this zone. And even here, if you see, 18,600 is the node that we were just talking about a little time back. That is, if we break 120, we would target this. So I've used all the three, the time component, the volume component, and even the volume at price component, using the footprint to understand what is happening around in these markets and how I can play them in an intraday time frame. So it depends on the zone you are in, and you can take a trade accordingly. So what I mean by that is, for example, on on Monday, like we just discussed, if we open in this zone somewhere, we try and test the 200, and obviously we get a reaction of the 200 or 220 range like we just discussed. But if we open gap down and we reach that point and we start seeing some bars on the 15-minute footprint like we just discussed, we would rather again see target a short. So this is the zone where we can expect a little more of balancing that is happening. Again, if we open below this zone, we have to for the first few half an hour or so, if the market doesn't immediately come into this zone, we can expect a downside, further downside to, let's say, 18,600. So if you open in this zone, you should prefer, if the market hasn't moved back up in the first 15 half an hour, you should prefer a short. If we are in this zone, when the market opens, you should expect a balancing zone, or you should expect, or you should trade rather fade moves that I keep saying. You should trade absorptions and not aggression. If you move above this zone, what you should trade is aggression, that is target this zone, because that is more likely, and a lot of shorts will get a square of this positions, and we will move up to this point quite quickly. And similarly, if we break this zone, this is another zone where you can expect balancing, and if you break this, it will certainly set up a bullish tone to the whole thing, because a lot of shorts would be again covering their positions, and that fuels the market even higher. So with that, we've just covered the NASDAQ. Now let's go on to the S&P 500 and see what was happening there. And let's go to the S&P 500, and let's get a S&P 500 chart over here. Now unlike the let's refresh this, and let's, okay, so unlike the difference between S&P 500, ES mini, and the NASDAQ is, this place we have broken this big down day, and after we broke, again, let's go back and see what it did was, like I just said, we target the volume node that was here. So if we go into the market profile chart here, so where do we go up to is, I will just show you, let the data refresh. So when we break this node over here, we generally target the the low end or the node over here. Look, if you look over here, this is the big volume node that we had once we broke this particular zone over here. The first target was this node. If you see, when we broke this area, this was the first target, this node, which we did test, and we got a good reaction from there. And then we broke this node, or this low, and we target the next node that we just discussed, is this one over here at 5151, 5155 rather. So this is how you can go step by step and track your progress, or track your rather the markets, and then go and trade accordingly in those zones. So similarly, like what we discussed in the NASDAQ, if we break this zone, what we should expect is a touch of the lower node, and we target that particular node on that side till that place. So the other nodes that we have here is somewhere here. If you see 5131, 5130 is what we should target. Again, the same rules apply here as well. If we open in this zone or below this zone, we will target that 5130. If we open here and you see a lot of volume or a value getting developed here, now if the market is not able to breach this, it opens here, and we do not break this zone in the first half an hour, what we can do is a fade trade to the other side of this zone. And as we discussed in NASDAQ, we need to break this for continuation to the upside, which will certainly fuel the market, and we will see 5200, 5210 come up very, very fast. Okay, and let's go to the footprint charts and see what interesting stuff did we see here. So it's quite similar to the NASDAQ NQ100 that we saw over there, and similarly in this particular in ES mini as well. Let's again do what we did over there, and you will see the confluence playing out even here as well. In like in the NASDAQ, we had an anchored VWAP, and you see it has been taking support and resistance in this dynamic. Now unlike the NASDAQ, this does have a downward slope of some sort. So you see that the NASDAQ is not that bearish. So if you have to go bullish, for example, you go bullish on NASDAQ, and if you have to go bearish, I would rather prefer going bearish on the ES mini. Why? Because I'm seeing a slope of this sorts over here, and the next anchored VWAP that I would like to have plotted is which will give me a good reference point is this one. So again, this is 5180 like we just discussed, And the point that we have here is, if you look over here and look at the selling that happened over here, so the big sell bars, or if you can look at the min deltas or the big selling that took place, or even the deltas. So if you look all these zones, there was not actually a lot of selling. In fact, there was a lot of buying also taking place, and the buying was stronger than the selling, which is really weird for a down day. And notwithstanding, the points, that the reference points that we would like to carry forward is this one, where I saw a good amount of selling. These two bars, if you see, so this is one bar, 5170 to 5184 is the zone that I want to breach before I start looking for a long bias. That is, if we breach that, I would certainly expect 5200 to 5210 come very fast. Okay, and again, these are the footprint charts, and you see the selling that was happening primarily in these zones was, this is an absorption that took place, okay, over here. So this is that is why I marked this, and the market drastically moved lower from this place, 5184, and this is the selling which happened again. Okay, so it happened here, then you see some sort of absorption, and finally a lot of selling that did take the market low. So this is the zone that I marked, 5170 to 5184, during which we can when we break this, we can expect this to be touched, and thereafter we look at what again, if we break that in a fashion, something I want to show you of, I mean, in a way wherein I break, let's assume, I will just try and show, let's assume that the market breaks and comes back here, and I see a lot of sellers getting trapped. I will just show you the bar that I want to see over here. I generally do so something like this. If I see a bar like this on a close, after the bar has closed, and I see something like this, okay, this bar, I would try and initiate a long to 5200 or 5210, like we just discussed. That is, if we clear this bar and clear this one as well with a bar like that, we're certainly going to test these zones and test the highs of that is Friday. Okay, and this is again in a similar fashion like the NQ. You can keep plotting these zones where you can have a particular bias. If you're scalping or intraday trading, you can take only those trades in those zones. For example, the 5170 to 5184, when we enter, you shouldn't be placing yourself into a short. Rather, you should prefer yourself to be taking a long. Okay, whenever you get a chance to target this and then this, that is what your preference should be whenever you enter within that range. Similarly, if you break down or open below this zone and you see buyers getting trapped, something like this, you should be aiming for a short to the place that we just discussed, to the lower volume node. And that is how you should play your strategies, or whatever you do with the whatever methods you do, and you should be positioning yourself in that manner if you're an intraday trader, that is, or even if you're scalping. So hopefully I was able to help you guys, or help you learn something new in this video. Until next time, thank you, bye bye.